Good morning and welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for September 30th, 2024. Let's get started. SEAF signals for this week. We have utilities, technology, and real estate. Broadly looking for technology to come in back in as a leader as the market's attempting to make new highs. And we got that confirmation here. So that was kind of nice to see. Technology very much being held up by its strategic quarter with 10. Other kind of interesting things to note, the ascension of consumer discretionary continues, going from 8 to 4 to 2 for an overall score of 14, breaks into the favored ranking, does not make itself a SEAF signal as real estate narrowly beats it out, but it just kind of a place to watch. A bit of a reversal on the consumer staples coming in at 10. And energy continues its slide even after its 1 week hiatus or a 1 week blip of a 1 for the trading week, kind of returns back to its slide. Had to adjust the rainbow chart relative performance to accommodate that. Heading into our heat map. Things kind of wanted to point out, we're starting to get that clumping that I like to see. If we can ignore this 10 for technology on the strategic quarter, broadly getting that green clumping at the top and starting to see a little bit of this red clumping in the corner here at the bottom. Still not quite perfect in terms of, dead red across and dead green across. But I think as we've been making this transitional shift, especially after that Fed rate cut, we're going to start to see a little bit of normalization here. For the heat map. A couple of kind of things I wanted to note. Interesting bifurcation or pairing here with utilities and technology at the top. Technology tends to lead when the market is up, and utilities tends to be a little bit more of a defensive sector, at least according to Morningstar. The key thing to note here, this odd pairing is AI is kind of generating. The use of AI is a lot more expensive in terms of its energy consumption than traditional Google search. And with that requires a lot of extra energy, which would then come from the utility space, having to put in a lot of capital expenditures to build out the infrastructure to handle said extra energy consumption needs. So these two are kind of a bedfellow at the moment, as there's a speculative play in utilities that as AI starts to continue to take more and more of a market share, not only in search, but in other aspects of business that, in daily usage of people on their cell phones and things of that nature, that these utility companies are going to need to put in that money and will have then subsequently the revenues from that AI boom. Much of that utilities is speculative, but it kind of solves the problem of how can we both be defensive and offensive at the same time. We got some interesting bedfellows here. As I said, real estate coming in, showing a little bit of slowing down in the trading week after having a little bit of strength here in the strategic quarter. Look for this to, without a strong rebound, maybe give way to consumer discretionary. Technology on the trading week, pretty strong, 0.62, and I say this ad nauseum, but an average week on the trading week is 0.4. We look for that strength to kind of confirm if that was a conviction bet by managers or, if money was being more or less evenly distributed. And in this case, we have a conviction bet at 0.62. So nice and strong from technology. Trading on the 2 is consumer discretionary at 0.16, tied with utilities at 0.16. I think, bring it up to the third decimal place, these are probably a little bit differentiated, but in general, showing some strength from both utilities and technology, and then consumer discretionaries we'll see a little bit later, showing some strength as it's kind of bringing itself up. Heading into our rainbows, wanted to show utilities. Utilities has been mostly favored going back to April with brief stints in the neutral ranking. We have popped in and out of SEAF as it has fallen to fourth or fifth on the ranking depending on the particular week, but broadly favored, showing nice upward movement in relative performance versus SPY. Utilities remains favored, and we can kind of continue that, look for that outperformance as long as flows continue into utilities. Technology, technology shot up. As you can see, technology is a little bit more uh, aggressive in terms of its moves from avoid to favored, but we are seeing a nice move in its relative outperformance. We're going to actually look at the price chart. Let's look at the price chart right now. Right here we have a symmetrical triangle pattern in XLK that has broken out to the top side. That gives us an upper target of 260. We are outperforming on the 21-day basis. Where we have failed to outperform and we came in and tested on Thursday is its 63-day basis on the relative outperformance. So what is that telling us? We have relative outperformance on the 21-day basis. We have a chart pattern in XLK that shows with the topside breakout. And we also have the asset flows, as I just mentioned, with that third rung of that stool. And this is a live chart. Our SEAF data is through the weekend, so we are not including today. But what we need to see this relative outperformance really kind of break that 63-day moving average. As you can see here, we broke it in May. And look at that run up that we had through that 63-day. Once we broke through that 63-day through July 10th. So money's moving in. We have a nice chart pattern showing a topside breakout. We really do want to see this relative outperformance continue to break out with SPY. Like I said, we broke out of that 21 days. We are outperforming the S&P 500 on a 21-day basis, but we'd really like to see it break out and outperform on that 63-day basis. Going in, continuing with our rainbow charts. Again, highlighted utilities and technology for their relative outperformance and their favored ranking. Just wanted to highlight here energy and financials. The reason I wanted to bring up energy is we kind of touched up into that neutral. Remember, this is a daily ranking chart for SEAF, as it would be on a ranking. We rebalance with SEAF weekly, but this kind of gives us a broader aspect of what the flows are doing on a daily basis. And we had a ranking of 1 for energy last week, touched into neutral. That may have resulted in a slight turn up in this overall downtrend in energy. But broadly, this is again, reiterating what I like to talk about with SEAF is we need 3 time periods. We need a higher score, overall ranking score for SEAF in order to be a signal, in order for us to be interested in it, because these weekly shifts in money can get you offside. So if you try to take a lead off in energy last week because you saw the trading week was ranked at 1, even though the monthly and the quarterly were I think dead last or second to last, you can catch yourselves off sides a little bit. So we can see here we have a broader underperformance trend in energy. Even though we blipped here into neutral, we didn't get that confirmation of multiple time periods and ultimately came back down and making new lows for the last year in relative underperformance versus SPY. Looking at financials, this kind of drop off continues. Down. We have broken into a void. It's continued down for this relative underperformance that we've been seeing. Not as drastic in terms of length as energy, as we've had some bouts of favored for financials, but financials now heading into negative territory. Last but not least, consumer discretionary. We mentioned this a little bit last week. I wanted to bring it up again. We are seeing some positive things in consumer discretionary. I know seasonality favors consumer discretionary toward the end of the year. We're not quite there yet, just entering into the fourth quarter tomorrow, but seeing some positive things for consumer discretionary, sticking up into this favored now, I think for 2 consecutive weeks. Actually, that's not true. We touched into it earlier this week, or mid last week. But heading into favored, showing some nice relative outperformance versus SPY. This is definitely a leadoff candidate. Again, not a SEAF signal, but it is ranked 4th and it is favored. So we would like to see money continue to flow into consumer discretionary, drop that 8 off of the strategic and see, kind of see where we can go with this. We've had some nice little spurts of relative outperformance versus consumer discretionary. Kind of sprinkled in here from this overall downtrend, but we have this nice sustained move, kind of starting back from 8.4 going as we've seen this thing trend from avoid to neutral to favored. So again, if you're a manager looking to add consumer discretionary to your portfolio, this is not a SEAF signal. We are just seeing some positive positive trends in the chart, in our rainbow chart. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.